Hi guys, it's Crypto Bear Page. I'm speaking. Welcome to today's exclusivity report. We are, of course, below the most relevant resistance. Well, right now, resistance because it used to be support right before flipping to the downside, before breaking down certain specific level. We had discovered this valid area to be somewhere between 28 and $30,000 that Bitcoin really had seen it bounce off many times in the past, of course, until the Luna breakdown came in, which invalidated the bullish thesis, basically thesis brought by this slowly and mildly upsloping pattern, and instead brought this major collapse and deterioration that we saw, of course, additionally backed by the external signals, by Russia-Ukraine war, and by stock market, which also was strongly deteriorating and then declining in there. So right now we are still looking, of course, at this major X support or now supply zone that at first, can be expected to play the role of a little bit of a barrier, because whenever the price encounters a certain barrier level, as in resistance or support, typically and more often than not, it firstly encounters the opposing force, right? So whenever we are going from the downside to the upside in the upwards direction to meet the certain resistance area and zone, supply zone, you can expect, all honesty, technical honesty, we can expect a little bit of an opposing force. So far, we are also looking at the local deterioration right at the resistance area defined by the local pre-breakdown levels, right? We are talking about this very tiny thin layer, around $26,000-$25,000, which before it actually got disrupted for good, we were looking at a little bit of an upwards tendencies for a short period of time. And of course, then all the trees were basically tackled. So the only point, that I'm not necessarily convinced by or with or of is the fact that we are not necessarily trending slowly, trending sharply. We are trending slowly instead. This means again that whenever we want to talk about trends, those trends typically would have those very low aggression pullbacks, as in you see a major thrust, right, usually kicking off with sudden capital dislocation coming from the other markets, just like you would have in here, right? The funds start loading, some big money makers, money investors, are coming to the markets from the outside, attracted by very low prices, just like it did in the depression of 2018 bear market, right? And then it's typically followed by this major surge, and this major surge does not retrace fully, just like it does typically in a sideways in periods, right? So just because it does not retrace fully or does not retrace deeply, it does suggest that there is enough strength and momentum, kind of like demand building up underneath, in order to push and maintain the prices to trade higher, right? So again, this coming off as a barrier, as a price barrier, is typically more bullish than not to the mean reverters, to the counter traders who would actually bid on some sort of like a bullish divergence, or some sort short-term oversold conditions from momentum indicators, and eventually the prices tend to go higher. But however, whenever they break towards a new high, of course, a new upwards trend is corrected, is converted, is confirmed. Whenever there is a secondary pullback, there is a secondary throwback to the downside, it does not retrace again fully, right? Instead, it does find this major rounded support area in order to continue higher. And this very layer of air, this very layer of demand building and moving, as people and traders FOMO in, kind of like on their loss aversion, on this cognitive dissonance that they would suffer from, and try to catch this rallying train, catch this train which has left the station already. And instead, because they are not really peacefully waiting for the limit orders to kick in because they fear of missing out, they would more often than not market buy or just bid up on the way up, right, pushing the prices higher. This typically has this strong ascending sequence whenever the price strongly trends upwards. It has this different kind of, like some people call it, inefficiency layers, as this area of demand doesn't get filled whenever the trend fully develops, right? And instead, here we are looking at a lot of kind of like, back and forth play, right? It's a slowly trending move upwards. It's not really sacred. If you have a look at a daily chart, you're going to know better what I'm saying here. So you are looking at this actual technical trend up, right? This technical upwards trend, as in higher sequence of higher highs and higher lows. This is what defines, this trend sloping upwards on a Dell theory basis. However, if you think about it, Elliott wave practitioners would rather call it the corrective wave much more than any trend whatsoever so far. The reason is, again, because we are not making these decisive moves. We are actually kind of like, just failing to maintain the areas of interest, right? So here you're looking at, well, series of fake outs coming one after another subsequently on the peak, right? So here's a high, here's an overthrow, which actually just, a little bit of breaks to the new highs, but then it fails to hold it. Another instance of such an overthrow, breaks to new highs but fails to hold it. Another instance of basically overthrow, right? New highs, fails to hold it, and repeat it, and yet one more time, and then yet one more time, and then three times in a row, right? So it overall brings much more than a trend basis, like we see some well-defined trend to the downside here. We are looking and this barely sloping upwards, movement, which tells me much more. So far, it's been within a form of a corrective move, corrective tied to the upside, coming from shorts closing off and covering off, you know, much more than any specific demand. Otherwise, the prices would have already broken up to the upside, much more efficiently, much more demand building up. Right, there's lack of technical demand is exactly what leaves us with sequences of overthrows, with sequences of failed breakouts. And each and every single failed breakout technically stretches out the move, right? And as long as it makes this move overstretched and overbought right now after a series of upward sloping movements to the upside, this actually puts the trend sentiment, if you will, analyzing candlestick patterns and candlestick based trends themes. The trend sentiment has worsened, right? As in the trend is already extended, overextended to the upside, is overbought. Also on many stock markets, which are mainly, I should say, the main proxy for the correlation to Bitcoin prices, because if with a very strong positive correlation to S&P 500, whenever S&P 500 pushes upwards, Bitcoin is supposed to catch up on average, right? And when it does not, it fails to basically catch up. This already makes this additional a little bit of a warning side to the Bitcoin traders, right? So I would be very cautious, because this movement, to me, it doesn't necessarily have this very well established foundation, for a strong upwards trending movement. Instead, we are looking at this weakness and efficiency on pushing upwards. And I would argue that while the Dow Jones, industrial average keeps pushing up, this brings a little bit of more chances for Bitcoin to catch up eventually, which has been lagging behind. But at the same time, you're looking at Elliott wave practitioners basis, basically virtuing here and showing you here the instance and the case of a corrective tied to the upside rather than and a very well established trend. So I would take it with a grain of salt right now. With any bullish moves you would take, keep your stop losses tight. This is what I would suggest. This is what I am doing. Risk management definitely helps fulfill trading goals and should always be a deep subject of a study ahead of making any moves and decisions.